Wall Street indices on track for their worst week since March after a three-day losing streak as the market continues to react to hawkish Fed commentary. Yields too continue to surge. The US 10-year yield is now at its highest level since 2007. Stocks in the Asia-Pacific too opened with a gap down ahead of the Bank of Japan's policy decision. The GIFT Nifty also implies a lower start for the Indian market. JP Morgan will add Indian government bonds to its emerging markets index starting in June of 2024. India will have a maximum weight of 10% on the index once included. 23 Indian government bonds with a combined notional value of $330 billion are eligible. And the RBI proposes to tighten the rules governing willful defaulters, seeks to expand the scope for entities to classify borrowers and broaden the definition, calls for willful defaulter tag to be imposed within 6 months of an account becoming a non-performing asset, seeks feedback from public until the end of October. And a CNBC TV18 news break is confirmed. Glenmark will divest 75% stake in Glenmark Life to Nirma for over 5,600 crore rupees. The deal is done at 615 rupees a piece, calling the company at a little over 7,500 crore rupees. ICICI Lombard's MD and CEO Bhargav Dasgupta also resigned 7 months ahead of the end of his term, while Wipro's Chief Financial Officer Jatin Dalal steps down to pursue other career opportunities. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you as we get to the final trading day of the week. There's clearly a lot that has happened in terms of the news flow, but the markets really grab all the eyeballs. Yesterday, we saw weakness across the board for global markets. You know, whichever one you look at ended with some deep cuts, whether it's the US, whether it's Asia, whether it's the European markets as well. But for starters, let's take a look at the Asian markets because we're getting the early rates and it's not looking good. Once again, losses are led by the Japanese markets. So the Nikkei index is down over 1%. By the way, if you look at it for the week so far, it's been a near 4% cut that we've seen on the Japanese markets. It's also some amount of nervousness ahead of the Bank of Japan's policy decision due today. The rest of the Asian markets have actually corrected a little bit, but you are seeing Seng, Taiwan still seeing a little bit of red, but they have, recovered significantly from the lows that we saw earlier in the day. What's not looking good, you have the Taiwanese index, like I pointed out, that's recovered quite a bit. Straits is down 0.5% right now. Kospi is still down 0.5%. So there is that weakness which persists across Asia. The GIFT Nifty will come up for you, and it is indicating that today perhaps we could see another day where we begin sharply lower, around 100 points lower is where we're at, 105 points lower on the GIFT Nifty. So this would be a third straight day of us getting that gap down kind of start. That's what's happening across Asia, but let's also talk about the US markets now, because Wall Street ended Thursday's trading session sharply lower. The Dow was down 370 points at the close. The S&P 500 was also down around 1.7% to end the session. So like you can see, there was broad-based selling across the US markets, and what was perhaps the worst of them all was the tech-heavy Nasdaq. Same thing that we saw yesterday as well. So this one saw losses expanding 1.8% lower is where we saw the Nasdaq end the day. In fact, this is the third straight day of losses that we're seeing for all three indices. So that is important to track from the US markets, but also a word on the bond markets there, because the US Treasury yields also continue to surge. We're at multi-year highs now as investors digested the Federal Reserve's latest monetary policy decision, as well as the forward guidance along with the unemployment data that came through. So there's really lots to track. But, with that, a lot of the big global cues that we're tracking are out of the way now. Let's also listen in to some opinion that comes in from Goldman Sachs on how they are reacting to the Fed policy decision. Here's about.
The market's just trying to digest what the Fed announcement was and all of the economic data points we've seen so far. So I think the market had expected, as all of us did, for the pause to happen, and the Fed did pause. But what we didn't expect was for such a hawkish message. So what happened was all the yields start to surge across the board, across fixed income. I think as long as there's uncertainty, we may continue to see some movement higher.
You look at some of the data on the amount of interest and debt expense as a percentage of personal income, it's gone from 1.4% and it's shot up to 2.4%. That's consistent with the historical average, but to get an average, you have to have periods of time when it's above and below. And I think that it's just going to keep marching higher. So I would actually probably just say that the Fed has already done a little bit too much here, and the effects of that are going to start at the bottom of the economy. Lowest income indices individuals who are more heavily indebted. Also, as far as the market's lowest quality stocks, typically it's the smallest ones as well. Those are probably going to be starting to feel the pain first, the most, and probably as early as the fourth quarter.
All right, that is some very important opinion coming in on the global markets. But with that, let's also get you the final update that we are looking at for markets across the world today. European markets ended today's trading session lower. This is, of course, following a flurry of central bank decisions that came through. So the CAC index and the DAX were both down over 1%. The FTSE also closed with a cut. So like you can see, around 53 points lower on the FTSE. Now, in terms of the key central bank action that we were talking about, the Bank of England left rates unchanged, ending a run of 14 straight sessions where they did have rate hikes coming through. And this was following cooler than expected inflation data in that region. Meanwhile, the Swiss National Bank paused its hiking cycle, while the Swedish, Norwegian and the Turkish central banks all opted to hike rates. So a flurry of that central bank action coming through. But like I said, with this, we're now pretty much at the end of all of the global cues that we need to track, at least in the near term. That's what we're looking at globally, but let's now talk about how all of these cues really impact us, all of the domestic cues and the stocks that you should watch. We have Rima, Surbi and Vivek joining us with the trade setup. Guys, a very good morning to all of you. Rima, let me come to you first. The global setup definitely looks very weak. We are going to start on the back foot, but take us through what we should watch.
Good morning. It'll be interesting to see how the markets marry the weakness that we're seeing on the global front, which you've been highlighting, versus the positive development about Indian bonds getting added into the JP Morgan Emerging Market Bond Index. So that's a positive with positive implications for the bond markets, the Indian currency, maybe the banking stocks as well. There could be a confidence rub-off on the Indian equity markets as well. But on the other hand, you've got dismal global cues. The Dow was down more than 1%. The Nasdaq fell close to about 2%. The 10-year US Treasury yield hit that almost at that 4.5% mark. The dollar index firm above 105. And week to date, you've got the Dow down 2.5%, the S&P lower by 3.5%, and the Nasdaq nudging towards a 5% loss. The Indian markets too have been pressured. So this has been a tough week for the Indian markets too. We were down for the third consecutive session yesterday. Week to date, the Nifty's lost more than about 2%. And now the GIFT Nifty is suggesting a weaker start. And it will peg us closer to the 20-day moving average on the Nifty, which is 19,686. But as I said, we've got a very, very positive, big milestone development on the bond markets. We'll be discussing that in greater detail. So it will be an interesting, tussle between the positive news in the bond markets and the weakness that we have on the global front, which is hurting the equity markets worldwide. Back to you.
Oh, absolutely. This will be very interesting to see how this session really pans out. Rima, thanks a lot for getting us all of those cues. Let me hand it over to Surbi now. Surbi, a lot of important stock-specific news flow also that came through post-market close yesterday.
That's right. So I have quite a few stocks on my radar. The first one, of course, is Glenmark Pharma. The company is going to divest 75% stake in its subsidiary Glenmark Life Sciences to Nirma. Now, the divestment is at a price of 615 rupees per share, which implies an equity valuation of 7,535 crores. Next is ICICI Lombard. Bhargav Das Gupta tenders his resignation as the MD and CEO of the company. Wipro, the company appoints Aparna Iyer as the Chief Financial Officer, as Jatin Dalal resigns as the CFO of the company. Next is Suntech Realty. The company partners with IFC to create a joint platform with an investment of up to 750 crores. JSW Steel is going to sell its US plant and mineral rights to West Virginia Properties for $24 million. Ultratech and India Cements will also be on our radar. The company will buy 74 acres of land in Andhra Pradesh from India Cements for 70 odd crores. SJVN, the government will exercise its green shoe option of 2.5% stake as the offer for sale was oversubscribed. NBCC, the company has been awarded an order worth 100 crores from SAIL. And lastly, ICICI Securities will be on our radar as SEBI has issued an administrative warning with relation to the merchant banking activities and also initiated a quasi-judicial proceedings against the company.
All right, that is a long list of stocks. Surbi, thanks a lot for bringing us to, up to speed with all of that information. We're going to track these in today's trading session. Finally, let me bring Nigel in also. Nigel, we were just going through the fact that, this has been a week for our markets and across the world as well. But take us through what we should track.
Well, it's been a week for sure, Pavitra. And if you look at it, we are on track for the worst week in the last 7 to 8 months, both on the Nifty as well as the Nifty Bank. This bond inclusion for the Indian markets, well, that could be some kind of positive rub-off out there. And now you have the FIs that had some short positioning as well. So they've added close to 14,000 short contracts, just yesterday. Though they continue to remain net long on the index, because they have 56% of their positions on the long side. But in terms of the long positioning, it's come down by around a third. Just last Friday, the net long positions was at around 63,000 contracts. That's come down to around 22,000 contracts odd. And I like some shorts in the system because if you get some good news, that's what could perk up the markets. The call writing continues, 19,800 call, 19,900 call. Between them, they added close to 96 lakh shares. But on the downside, you have the 19,700 put that added close to around 25 lakh shares odd. So I'm looking at that mark, and the 19,700 put, the premium was around 75 rupees. So you deduct 75 from around the 19,700 mark, you get the 19,625 mark, which will be crucial on the downside. So this 19,625 to around 19,700 becomes an important support level. The 20 and the 50 DMA as well tying out there. And on the Nifty Bank, it's trading in a very, very crucial range. On the upside, you're looking at the 20 and the 50 DMA. But on the downside, yesterday at least we managed to defend the 100 DMA. And the bulls will take heart from that fact. So you're looking at that lower level and you wanted to defend the 100 DMA on a closing basis. Let's see how this goes, because there is a tussle between good as well as bad news. Maybe, in fact, today could be that day when, in fact, we see a bit of a relief rally, though the implied opening is suggesting a 100-point downtick. Back to you.
All right, Nigel, thanks a lot for getting us all of those cues. Let's see how things really move after we do get that gap down start. For now, it is time for a short break. But when we come back, we're going to talk about the big story. JP Morgan will add Indian government bonds to its benchmark emerging market debt index starting next year. More on this on the other side. Welcome back. You're still tuned into Power Breakfast, and let's now talk about the big news this morning. JP Morgan will add Indian government bonds to its emerging markets debt index starting in June of 2024. Lata's here to tell us more about this. Lata, very important development, and this is something that you did tell us would happen.
Yes, the chatter was very loud yesterday. In fact, it's been that way for a week. And yesterday, in spite of extreme hawkishness on the part of the Fed, bonds and currencies in other emerging markets and developed markets were falling. But Indian bonds in fact, ended higher by a tad, because expectation was very strong that this inclusion will come. So just for the data itself, India gets included in the GBI EM Global Index Suite, and the specific index is called GBI EM Global Diversified Index. In short, GBI EM GD, Global Diversified. Now, the total strength of that index, the market cap, is $213 billion as of now. And what JP Morgan tells us is that India will get a weight of 10% starting June 28th, 2024. So you get 1% in July, and then it goes on for the next 10 months. If we are 10% of 213 billion, my guess is it would be $21 billion, and it would be about $2 billion every month. That works out to some, 1,75,000 crores. The Indian bond issuance in a year itself is, well over 4 to 5 lakh crore. But that means, almost 30% in the first year is going to be taken away by the global index providers. So this is extremely positive. Of course, it happens only from June next year. But I think the positives will start reflecting today itself. We saw the bond, 10-year bond end at about 7.14, 7.15 thereabouts. There are two 10-year bonds now. There is the older 10-year bond, which is 726, and the newer 10-year bond, which is 718, 2033. As you can see, they ended around that 7.15 mark yesterday. And you should expect today the bonds to go towards 7%. And there are some people who even believe it can go sub 7%. The advantage will be also to the banking stocks first, because they have bonds in their book, which gets marked to market. So they make mark-to-market gains because this has come well before September 30. So second quarter, whatever they lost because of the incremental CRR, a bit of it that gets made up because of mark-to-market gains. But the big advantage for the Indian government comes next year when the cost of borrowing falls. So it's a fiscal, macro-wise, it's very big. But in terms of stock markets, the bank index gains a lot. The second set of people who will gain is anyone who is borrowing a lot, because all corporate borrowing is benchmarked to what the sovereign pays. Sovereign is the best borrower. Everyone else is about 20, 30 points above the sovereign. So if the sovereign is going to borrow a good 20 basis points cheaper, as is indicated by this inclusion, then we will have a cheaper borrowing cost for other leveraged companies as well. So I think it is going to be an across-the-board good news for the Indian equity market as well. But of course, primarily for bonds. Then you got a lot of money coming from June into the country, 2 billion assured every month. That also will mean a strength for the rupee. The rupee was strong yesterday, did not buckle to the hawkishness of the Fed. We could see more of that today.
All right, Lata, thanks a lot for getting us all of the details. Big development there, and like Lata pointed out, a big positive coming through. So let's see how the session really pans out, because, like we were mentioning, the rest of the global cues definitely look weak, but this has come as a huge positive for India. With that, it is time for a short break, but there's lots more news coming up on the other side. Stay tuned. Welcome back. You're still tuned into Power Breakfast. We've discussed the global equity action. We've discussed what's going on in the bond markets. Let's also talk about all of the commodity market cues. We have Manisha joining us with that update. Manisha, what are you looking at this morning?
Well, I'll start with the crude oil prices, where we have seen strength come back yet again. It's above $90 a barrel now, and the latest trigger is the Russia banning fuel exports to ex-Soviet states because they want to stabilize the crude oil prices within the domestic markets itself. So that would mean lower availability for the rest of the world, and that's supporting the market. Even with the kind of gains that we are working with right now in Asia, we are still headed for a weekly decline, except you see stronger gains within Europe and US markets today before we hit the weekend. Having said that, it is the metal prices which are under pressure, and we've seen 2% of decline come in for the overnight markets. The hawkish US Fed, the high inventories in metals have taken the copper prices to a 5-week lows, and an even bigger decline in nickel prices, which are now trading at a 14-month lows.
All right, Manisha, thanks a lot for getting us all of those updates from the commodity space. But with that, let's also talk about the latest news coming in from the tech space. The much-awaited sale of the 4 new iPhone 15 models and the Series 9 Apple Watch will begin today. So buyers who have pre-ordered the latest model will now be able to purchase. This is from 8 a.m. Now, though the new model comes with a whole lot of new features, it is priced at almost the same as that of the iPhone 14, which was launched last year. You can see the pricing on your screen. It starts at $79,900 for the iPhone 15 with 128 GB of storage, and it is almost at $160,000 for the 15 Pro Max. So that is on the Apple and the new launches which are available from today. With that, we're going to wind down in this edition of Power Breakfast with the news that the Asian markets are lower, but they have come off the lows quite significantly. The Hong Kong and Shanghai markets now in the green. The Nikkei market is still seeing a cut of around 0.7%, and the GIFT Nifty implied open is close to 90 points in the red. Thank you for tuning in. We have Bazaar Morning Call coming up for you after this short break.